Well, hello there. Welcome to Insuring Your Well-Being. I am Dennis James, the biking, dancing insurance man with various insurance planning. And today we are going to have an excellent topic that everybody wants to know about, and it's coming from a superstar that knows the business well. And we're going to be talking about reverse mortgages, and his name is Burney Ashley. Welcome, Burney.
Good afternoon, Dennis. Thanks for inviting me to this podcast.
Oh, man, it's just great to, it's great because I think I've known you, maybe 3 years now, and we've connected a little bit, but never enough. And I have always known from when I met you that you knew, you were not only in the business for 44 plus years, but you're also an expert in any type of mortgages, doesn't matter what it is, but also because of your background, your experience, you're well-versed also with reverse mortgages.
Yeah, that's correct, Dennis. I got certified 3 or 4 years ago, 4 years ago, mentored by some of the best in the country. So.
Yep, that's super. So let's go ahead and just talk a little bit now. 44 years, just a little background. You're probably a married guy.
Yes, I definitely am married. In fact, I met my wife competing for a loan.
Okay, there you go.
She is a loan officer as well. So 30 years ago.
Okay, super.
She ended up at the company I was working at. I called the processor, got a phone number, and now we're married.
And the rest is history. Okay, yes. All right, so, it's all about, just like myself, I've been in the insurance business for, oh my God, right, like over 25 years. It's an excellent business. Things change. It changed for me over a period of time when I had a calling for long-term care insurance because my clients started asking me about it, right? And so I no longer do like the group health, life, disability. I'm focused on long-term care insurance, life insurance, and a lot of policies come with life insurance with long-term care insurance and annuities, right? But so when it comes to reverse mortgages, first, let's start with the basics. What is a reverse mortgage and how does it work?
Okay, reverse mortgage, it's very similar to what they call a HELOC. So if you're familiar with the HELOC, they give you a portion of the equity in your home.
Right.
And generally that fizzles out in about 10 years, though.
Right.
And then you got to repay it. This is similar, but with the reverse, number one, it never fizzles out until you do. Number two, as opposed to being a stable number, that number of your line of credit will actually inflate every month by whatever the current interest rate is. So you actually have a line of credit that's growing bigger and bigger as you grow older. Meanwhile, you have a checkbook in your hand to take care of whatever you need. You can also cash out right at closing. If you need, if you just need it all right up front, then that's a possibility. The government will let you have 60% of that. They won't let you have all of it day one. That's a protective thing. Now, I am speaking about HECM mortgages here.
Right. What's that stand for? HECM, HEC.
Home Equity Conversion Mortgage.
There you go.
Which is basically what we're doing.
Right, exactly.
Your equity into cash money for it.
Right, exactly. So that, the listener wants to be clear on that, right? That means home equity conversion mortgages.
Right.
Okay. Yep.
So, like I say, that's exactly what we're doing. Now, there is a proprietary product out there as well. The rules are different. You have limited involvement by the government on that one. The HECM is actually insured and sponsored by HUD.
Right.
So they're very protective of the seniors. There are things like counseling that must be done. to make sure everything is on the up and up, and the senior understands what they're getting into day one.
Right. And with that, that is FDA when it comes to the loan. Is that correct?
FDA?
Yeah. Yeah, as far as the different types of loan, FHA, I'm
FHA,
sorry.
Okay.
Sorry, I threw a curveball at you, buddy.
Yeah, like-
FHA, that's what I meant.
Okay. FHA.
You can tell I'm in the insurance profession, all right? That's what I meant.
The thing is, it is an actual FHA loan. So
Exactly, and that's why the government backs it,
right.
right?
So it's like I say, it's not only backed, they have a lot of involvement in it.
Yeah.
And it's been evolving over time to weed out the problems. When it came out, it was kind of a wild west loan, but a lot of changes have been made over the last 30, 40 years to ensure that the seniors are going to stay out of trouble and not end up,
Right.
with bigger problems they had in the first place.
Right. Yeah, there used to be a concern about that at one time, right? People got nervous about it, but
Well, there was different things that they changed. Like if you have a spouse now, you cannot get into the mortgage without the spouse.
Okay.
That was one big problem. They would drop off the lady because she was under the 62 mark.
mm-hmm.
But we'll actually bring her in now, even if she isn't qualified at 62,
Right.
to make sure that she is going to be in that house until she dies. So
Right.
even if the primary dies, that situation is going to. So that was one of the problems.
Right.
Spouses getting tossed is not.
Right. And one of the things, so somebody has to be age 62, is that correct?
That's correct.
To get
Yeah.
the reverse
Got to be
mortgage.
at least your 62 birthdays. There's no wiggle room whatsoever.
Right. And it doesn't matter with the spouse, but if you
Right.
has to be one person that's
Right.
living
if the
in
spouse is under, in fact, we have no choice. So if you're 62 and your spouse is, say, 55, I have to bring her in there. I don't even have the option not to. They won't allow that because that was one of the big problems. The husband dies, the loan officer kicked the spouse off, and now she's living in a box. Where's she going? So
Right.
so that's why they made that rule. The consulting is another big thing. Before I can even take an application, we'll talk about the mortgage. I'll show you all the ifs, ands, and buts. I'll show you the numbers. But before I can take your application, you're going to be talking to a HUD counselor who's going to go over those numbers as well. Fill in all the,
Right.
all the loopholes and downside and everything. And then once you have a total understanding from two different viewpoints, now we'll start moving on with that thing.
Right. So we're talking about, we've covered the thing age 62, and there's certain qualifications to be eligible for a reverse mortgage. Then is there things that we're missing out on here?
For what?
To miss out, right? So, we talked about the age 62.
Yeah.
Has to be primary residence, right? In order to even get it.
Right. Primary residence, you have to be occupying that home, in fact.
There you go. Yep.
If you got to go to the hospital for a couple months,
Right.
That's not a problem. But if you're living in Florida and this is your second house,
Right.
that no longer qualifies.
Right, because they're going to check certain things with you, right? They're not going to let you just get away with anything. Now, I know some people travel and they have motor homes or whatever, that type of thing, but they're going to want to know, hey, where's all my bills, my Social Security? Am I living there?
But if you're a snowbird,
Yep.
and you move, you go down to Florida during the summer, 3, 4, 5 months,
Yeah.
that's fine.
Yeah.
But you're coming back to Michigan, and that's where you mainly live. I'd say, 6 months, 1 day, you mostly live there, right? So.
Right. Okay. And then as far as, how much money can I get? Let's talk a little bit about numbers. People want to know about numbers for a reverse mortgage.
The way it works with the government, they don't want to end up with a problem, okay, because that's their problem. The neat thing about a reverse is there's no recourse. So you could actually owe twice as much on that mortgage as the house is worth, and they can never, ever come back to your heirs for the difference. So,
Right.
so in order to make that work, the younger you are, the less money you get. The older you are, the more money that you get. They don't want to overload you. So we're starting out about 40%, and we can work our way up to about 65%
Okay.
of the.
So give me
equity.
one example of that.
Huh?
Give me one example of that.
Okay, say a $300,000 house,
Mm-hmm.
40% would get you about $120,000. Line, cash or line. If you were on the other end, what is that? 180, 195. So it makes quite a bit of difference,
Yeah,
your
okay,
age.
based off age and all that.
But on the other hand, like I say, if you're the 62-year-old person, you got to remember that the line of credit itself will expand as you get older. So that money you have to tap in, it's always getting bigger and bigger with your age. They just have to keep it in line so that when you die, they don't want you. They're going to try to make a situation where you're not owing more than you actually have in the house. And if you're not making payments, which is one of the very unique things about the reverse mortgage that you don't have on any other mortgage, is an option to make no payment. That doesn't mean that's your only option.
Right.
A lot of people get confused. They think, okay, I can't make a payment, but that's not true.
Yeah.
You can make a 30-year payment, a 15-year payment, a 20-year payment. You can pay the whole darn thing down.
Yeah.
But if you don't want to write a check, you don't have to.
So that's a big advantage if we're talking reverse mortgage versus a open line of credit or a conventional mortgage.
Right.
Where
So-
you're going to have to pay if you've got that,
Right.
right?
No month goes by that you ain't writing a check, or they're going to come and get the house. But this is almost foolproof.
Yeah.
The biggest hole is the tax man that we found out, because even though you don't have to make a payment, you do got to continue to make your property taxes, because those guys can also foreclose on you. What we do in some situations where the credit is a little bit shaky or the money is kind of tight is we'll actually put together what they call a LISA, which is kind of like an escrow account. We'll take a life expectancy and accumulate enough property and taxes and insurance money to actually cover that. And we'll put it in a reserve account in your name and pay that for you. At that point, there is zero chances of you going foreclosed, because we got your property taxes covered, we got your insurance covered. You have no payment. There's no way for you to lose that home.
Right. So that's kind of nice, right? Because you're going to always own your home no matter what. Is the borrower that owns the home.
Well, I was recently working on a person in foreclosure where we used this option. Now, a person in foreclosure shows up for any other mortgage that I have available, I have to send them home. Unless there's been a restructure and 3-4 years behind them and they've restructured their credit. But this person was actually in the foreclosure. She had within that 6-month grace period, and we were able to do it because once we did the LISA, we had zero chances of her going south on us, right? So
okay. Well, she must have been awful happy about that.
Yeah, in fact, we don't have real credit standards. Like if you were to show up for any other mortgage, they always got a number, and they say, Bernie, if this person doesn't have this number, send them home. There is no such thing on a reverse, so we're not even looking at that credit score number.
Okay, yeah, that is a big deal, right? So as far as reverse mortgages being repaid, I think you briefly mentioned it. It doesn't have to be.
Right. It only has to be paid when the borrower dies, borrower primary owner. So at that point, basically you got within a year to sell the property, and pay your mortgage. But
Okay.
a lot of people are confused about who owns the house.
Right.
You own the house just like anybody else with a
Right.
mortgage. When it comes time to settle up, it's just like every other mortgage too. You sell the house, you take the money, you give the mortgage company their share.
Right.
Heirs get the difference. Heirs have one more option with a reverse that they don't have with a regular mortgage, and that is to actually purchase the home themselves at 95% of the appraised value. So they can actually get a 5% haircut on that home if you wanted to turn around and buy it. You know, if one of those heirs was actually interested in, which is once in a blue moon that, you know, that actually happens. But,
Yeah. Right.
but that's an option you don't have in the end of the mortgage. I mean,
right.
you know, you got to sell and pay up. So
Right. Yeah, the kids want the cash. Yeah. And the other thing, you can't think about moving once you make people that go into reverse mortgages. The way I understand it is that you're staying in that home.
yeah, that is a qualification. If you're not planning on being in there for the long haul,
Right.
you move, you got to pay. But most people, when they move, they're going to sell the home they're in anyway.
Yeah.
So
Okay.
even on a regular mortgage, if I want to move, I can't move and leave the mortgage behind.
Yeah.
Right? I put a sign on it, I sell it, I pay those guys, and I go get my next one.
Yeah. So, as reverse mortgages affecting heirs, what's your thoughts on that?
Like I say, with the heirs, they have two options. They can take up to 12 months to, sell it,
Okay.
pay off that mortgage,
Okay.
or they have the 95%.
Okay.
option as
All
well.
right. So that's pretty much as clear on that. And how is a HECM different from proprietary reverse mortgage? Maybe about ages and that type of thing. But go ahead.
Well, proprietary will go as low as 55. What a proprietary mortgage is what we call a non-QM, non-qualified mortgage, which means the government rules are thrown to the side. Basically, non-QM is the new keyword for subprime. So basically, that's what you have, a subprime loan. They just they make up the rules as they go along, and whoever funds that thing is completely responsible. There's nobody in the government that's going to take that off their hands. So the rates are generally, like any subprime loan, you're going to look at higher rates. But if you're in a situation where you're not quite 62 and you really want one, or I think it's $1,250,000 and some change that you can borrow on a HECM. If you need more than that, then you're going to need a jumbo proprietary if you want a reverse mortgage. But as long as you're within that range, if you're 62 and you got a mortgage that's $1,250,000 or less, you can always go with the HECM, which is what I would suggest in most cases, is to go, let's go with the one that you're going to get the most protection from.
Yeah. So when it comes to states, we're in this wonderful, it's called Pure Michigan state, right, of Michigan. It's very pure out there right now. It's about 10 degrees, and there's beautiful white snow. So other states, are they pretty reciprocal and that type of thing with the same types of, what we're talking about with the way reverse mortgages are? Would you say or not, or they vary or what?
No, they don't. HECM is a HUD product.
Okay.
So that's on a national basis. The rules don't change from state to state. Now, they might, as far as origination, things might be different about how a guy like me would operate in that situation.
Right.
But the loan itself is presented one form, and everybody that's involved in that, I don't care, where you are in the U.S., you have to follow those rules.
Okay.
No lender can say, well, we're going to just
Right.
go this way. No,
Right.
because nobody'll back that loan at that point. The insurance goes out the tubes, and that lender and that person are on their own.
Yep. Okay. And I had something else I wanted to say, but we could mention reverse more as far as affecting Social Security and Medicare, Medicaid benefits.
Well, the wonderful part about the reverse is, in most cases, it don't affect them at all. So if I need a couple $100,000, let's say to buy some life insurance, buy long-term care, or anything else,
Mm-hmm.
and I go to my retirement, that's going to hit my income. In fact, I just had a family member. I was just, Christmas Eve, talking to a family member who bought a house, so she went in and got $300K out of her 401K to do that. Well, guess what? Her Medicaid is something like $1,800 a month now. So a lot of people don't even realize that. It's $185. Yeah, if you're within that income bracket. Once you pop past that income bracket, all of a sudden that goes sky high. Social Security, same thing. If you're in the beginning years, you have income limits, and if you make too much,
Right.
you got to end up paying it all back, right? So
Paying more. Right.
yeah. So that's a nice option. If you need money, why spike your
Right.
your income and
Yeah.
put problems. Now Medicaid, there is one hitch with Medicaid. They got that $2,000 asset thing.
Right.
So we have to be very careful
Right.
that most of your money comes in a line of credit, the mortgage, whatever
Right.
you're going to spend instantly. Because if we put
Right.
$2,500 in that bank account a year, so all of a sudden
Right.
Medicaid is going to give you a
Right.
kick off the program.
Yeah,
So,
they have a 5-year look back too. So
Yeah.
people with that think they're going to be hiding their money or doing whatever like that.
so we always ask people, if they're on Medicaid, you can keep that.
Right. Yeah. So, there are a lot of advantages for, a reverse mortgage if you're going to, really stay in the home, or like you says, you're going to end up paying it off if you don't, right? So, the safety behind it is really cool with the FHA.
Well, recently I ran
Approval.
into a gentleman that, he wanted to retire at 62, but he
Mm-hmm.
didn't want to get stuck with the 62
Right.
payment, right? So what we actually did, and a lot of people don't even realize you can do this with the reverse,
Right.
but we have a 10-year program.
Right.
With
That's
the
nice.
10-year program, what I did with this guy is I put that same check in the mail to him for like 7 years.
Right.
And then he's going to go to Social Security
Right.
and pop it, when it makes sense.
Yeah.
But he didn't want to wait.
Right.
He wanted to retire now, but he didn't want to get stuck with that for life. So like I say, that's a situation where we were able to help him get more out of the Social Security.
Yeah, no doubt about it, right? He didn't have to take his Social Security right away. He had the money from the reverse mortgage, and the money grew
Instead of Social
right
Security
every
sending it to
year,
him,
and he could make more money, and based off his age, and it didn't matter,
So
right?
so
And
instead of Social
Right.
Security popping it in his account, we did.
right.
And he moves on.
Yeah,
so.
that's there's a lot of flexibility with that, like you're saying, with the tenure and different terms, and that the open line of credit and types of things you
Right.
could, the flexibility and a lot of people, sometimes people struggle, and I'm going to talk about insurance for a minute, right? But when it comes to life insurance, or somebody wants long-term care insurance, right? And they have a lot of assets, but they just don't have the extra cash. Well, it's a perfect way to open up to have the cash to pay for whatever you want, that trip, right? Or you can use it. A lot of people want some long-term care insurance. Their health maybe they don't qualify for it. Well, this is a way of getting a long-term care insurance plan in place, and that way you got the insurance carrier that's going to be paying for it, and that way the emotional, physical, financial burden comes, doesn't have to deal with family members, right, that are struggling to have to worry about taking care of them. They can support that person that needs care, right, and that mom or dad who that's in that home that way.
Yeah. And you can procrastinate about, like I say, digging into your retirement, because most retirement plans, except for the KIOG, are income spikers.
Right. Yeah, you're going to pay gains on it, right? And that's the thing. It's a great way of taking advantage for the people that qualify for these types of programs.
Right. It's not for everybody. I always look over the big picture. There are some people that I recommend they don't use it. Like
Sure.
I say, it's not a product everybody needs to go out and get one tomorrow, kind of thing.
Yeah, it's kind of like chocolate ice cream. Not for everybody.
Right.
Isn't that how it works, Bernie? Just people want to have an idea of what it's going to cost. So yeah, hey, I want this reverse mortgage. So take a $300,000. All right, what's that going to cost that person?
The lender fee on that is 2%, or that'd be about $6,000. In addition to that, there's going to be appraisal fees, title work, all of the kind of stuff that you would see on any other mortgage. That's kind of on a case-per-case basis. So I'd really have to know, what property you're talking about, what state.
Right.
Different thing. I couldn't just spit those numbers out.
Sure. No, that's fine.
But the lender fee that's 2%, and that's a stable. There's going to be a few grand more in those other fees, like I say, depending on.
Right. So right. So I mean, like you have not been around 44 years. People don't stay in the business unless you're honest and credible and you know your stuff, right? So,
well, my first 10 years in the industry, I was a real estate broker, so 34 years of lending.
Okay.
I just want to make sure we clarify.
Okay. All right. Cool. Yeah, I like how you're being transparent, my friend, but I wouldn't have you on here if I didn't think you could be. So, with that being said.
We're licensed and regulated. Big Brother's watching everything I say, so I just want to make sure.
Yeah.
We got no.
Yeah, that Big Brother. I mean, yeah, for sure.
I could get in trouble, possibly.
Yeah. Well, you know what? It's all about taking care of the customer.
Right.
It does not matter what business you're in. It's taking care of the customer, being an expert in what you do, right? And I'm sure, just like you or anyone else, I mean, if we don't have the answer, we'll get the answer.
Right.
Right? I mean, we all start somewhere, and that's the bottom line, right? But when it goes to show with your experience, and you can represent a lot of different carriers to be able to come up with the money in that.
Right. So we're brokers. So we do. That's what we do. But we do things a little different. Even though we're brokers, we actually handle all the paperwork in our office.
Ah.
But I have the option to go to multiple lenders to seek better rates, better situations. Sometimes you'll get a certain scenario, and one lender will say, "Oh, no, that's not really us, Bernie," and I can call the next guy. Same thing with rates. Maybe you got 5 people that'll do it.
Right.
Then I'll go to the guy with the best available rate, and for that situation.
Yeah.
But
same thing like me, right? I'm an independent insurance advisor, so the blessing is the A-rated credible carriers, and based off that customer, that client's needs, that's where you go. Right after you have that conversation, and there's a lot of great carriers out there. A lot of people, they stay in the business, and who's the right one, right? Who gives the good service, who doesn't give the good service.
Well, the couple I tend to work with the most are the top 2 in the nation. That would be Longbridge and Liberty.
Okay.
So if you were to look them up on Google, you'd see these are the top dogs, and like I say, most of our stuff will go in that direction.
Right. But but you always, right, things change, right? So, all right, Bernie, is there any final thoughts at all? If not, you have anything more you would like to say?
Nothing comes to mind.
Okay. If somebody had a question, needed an answer, please do me a favor. Tell them, how they could get a hold of you.
Okay. A couple ways. Phone, obviously. And that number is 586-484-5058. That's 586-484-5058. I can also be reached by email, and that is bashley@legacy-mortgage.com. That's bashley@legacy-mortgage.com.
All right, Burney, thank you so much, man. I love the information you brought. People want to know the options when it comes to planning, not just retirement planning, legacy planning, all that comes into place, right? And so also this will be on variousinsuranceplanning.com. You could go to the website. Burney's information will be up there. Let friends and family know about the types of services that Burney offers, and reach out to him. That's why he's there, right? The guy's been around the block, so just if you have questions, call him. And if you do business with him, you can trust him to do the right thing for you. So
yes, and that comes with no obligation. So feel free to call me. You can ask me your questions. I'm not going to lean on you. I'm not a hard
I know
sell.
you're not, Burney.
Okay.
Thank you so much, Burney. All right, everybody have a great weekend and enjoy yourself, or I should say a week, and God bless.